What's up, guys? It's August 2nd, 2024. Pretty alright day in the markets. Yeah, I did alright today. I read because of the dumbest mistake. I caught this leg, got out, saw this, and I went to get short here. So I got short here. And I don't know how this happened, but I guess I accidentally got long. And I realized it like when I was like around here. I was only trading a couple contracts, but I lost about 10. It's about maybe 12 points. I lost more than I expected. Yeah, about 12 points. A little more, I guess, about 15, because I was around the lows. I must have got out around one of these candles moving up. I was pretty frustrated. And then what do? I size up, get short here, and I hit out on the top of this candle. And just this maneuver here, I caught this leg, caught a little bit of this leg, but I just had a moment of weakness and it put me red for the day, which is kind of crappy because this would have been such a nice short trade. So if you caught bar 46, I think that's a nice short double top pull back in the EMA. It's a bear flag, kind of like a wedge top here, breakout like one, pull back like two. So that was a pretty good trade to me. I mean, even 38 is not a bad trade. You can hold that. It's a bull bar preceding it above the EMA. But yeah, uh, red is red. My read was right, but my physical actions were wrong, so that still counts. Performance is performance. So it is what it is. 45-minute daily chart. So I've been adding these gaps on the daily chart, and then like I was looking at them, and I started thinking the whole point of having gaps is to show a strength. So I should delete them because that's also a sign of something. So I am going to delete these gaps as they start to close. I think the original idea was to keep them all on, but now I'm thinking I should delete them. I'm going to delete them and not save the chart. But I just like to update the chart with you guys because we've had it together since I pretty much started the channel, I think. So does that kind of make sense? These two. Because now we're in a range bound. There's a bear gap open here and there's a bull gap, so it is looking more rangy. Bounced off April 1st low by a couple ticks. This is also the prior breakout point right here from June 6th. Why is this April 1st? Oh, this is the swing high from. Oh, okay, I see what's going on. Okay, so we broke out of April's high, June 6th, and now we're in a range retesting it. So here's the breakout, leg one, pull back leg two, pull back leg three, channel phase. So breakout, here's a channel phase, and now we're going range bound. So the market cycle is going into the final phase, which is range bound, which could last forever. Final phase doesn't mean it's over; it just means it could be forever. I don't know how long it's gonna last, but the end of the market cycle is a range. So leg one, pull back leg two, pull back leg three, kind of climactic, bad. I mean, it's not a bad close. It closed below the 50% level, but Bears definitely wanted a stronger close. If they could have this bar look like this bar, I think that's dangerous. Bouncing off the breakout point, maybe we go sideways. We've had 2 days of expansion. Today didn't feel like an expansion day, but the gap down gave it that look, gives it this look. We could keep selling until oblivion. We could do anything. I mean, the market's literally random, so the market cycle helps us systemize that random activity. If we're in the first part of the market cycle, then the randomness leans the probabilities lead towards a breakout, and towards the end of the market cycle, the probabilities lead towards mean reversion. So that's our edge as a trader. That's my edge as a trader. I mean, if you don't like it, don't like it, but it's pretty cool stuff. I think you guys should learn the market cycle. Yesterday we had a sell off. Today we had a gap down. Bar one continuation. Bar two pull bar. Could be the first pullback after. So the high of bar one is right here. This is one big bar. So if this is one big bar, that makes bar 2 the first pullback into a channel phase. Bar 3 is a low one. There's a bull bar. It's an implied low one. There's a bull bar somewhere here, and this is the first low one. It was in these two bars, and it sells off. Breakout of the morning range. Brad mentioned one time, if the morning range is compact, then we can expect range expansion. It looks like bears got 2R of the morning range with bars. They got it pretty fast. Here's the breakout, and then pullback like 2. So or it could be like 1, pullback like 2, pullback like 3, pullback like 4. This makes a wedge bottom here. Wedge bottom, and it breaks out. Breaks out above the EMA. Now we're in a range bound, and in ranges we tend to have more vacuums than breakouts. So these bars look like breakout bars, but on a 15-minute time frame, these 3 bars is just a test of this resistance, this breakdown point. Then we go sideways, and they get another wedge. So the market's gone from trending channel to range bound. It's the market cycle. Yesterday we had the market cycle too. We had a range here, broke out into a trend channel, and then we go a range bound here, break out into a trend. This range breaks out into a trend, channels, then range, wedge top, and then it sells off. 2 legs lower for the bears. Leg 1, pull back leg 2 into support. We're on the high of 23 and 24. We're testing these bars right here. Pretty nice double bottom with 55 and 56. 55. This is such a weird looking thing. I'm trying to the picture of the chart's weird. I want the gap down, but I want this zoomed in. So this is the gap down. This is it. So 50 double bottom, 55 and 58. Leg 1, pull back leg 2. I really like this trade right here. This is just a nice leg 1 to pull back. Bulls get really weak 2 legs. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2. Double top. That was really sloppy leg counting. It's an implied leg because we can see the trend line breaks in the tails. I don't know exactly point to point. It was kind of sloppy. Lower high here, 46. Okay, you know what? Now, just because I said those words, we're going to find the legs. That doesn't sit well with me. I don't know why I decided to be sloppy for a second. Okay. I don't know why that just bothered me. That said we're going to be sloppy. Here, the tails. Okay, so that's that. There's the legs. Huh. So now we go back to the 5-minute. See, it lined up. Okay. That's a lower high right here. So those are the highs. That's an inside bar. So now we know. There's 5 legs, right? 1, 2, 3, 4, 5. Tries to go for the upside breakout, fails and reverses. I don't trade smaller time frames. I'm just doing this to learn the 5-minute. I just want to see, because that was really lazy of me to say. I know there's legs in here, but I'm not counting it, which I am right to an extent because there's a chin line break. So I know there's a leg here, but it's better we just take the time to go into the 1 minute and figure out where the legs were at. It's Friday night. My friends are texting me, I'm not going out. Oh my gosh. I can't what has trading done to me? Do you guys still go out? I've pretty much stopped going out since I'm not going out anymore until I'm profitable, which could be years, depending because of me doing stupid sizing up things like that. It really wasn't that bad. I ended the day minus 200, so I think 1 or 2 winning days will be good to go. Leg right there, breakout. Then we have a really broad bull channel. It's an expanding triangle. So a lot of range bound price action, a lot of leg counting. There's multiple legs in here. So you know how we saw on the 1 minute, where were we counting? We were counting this cluster. So this cluster kind of, or this cluster kind of reminds me of this cluster, right? Because there's multiple legs. 1, 2. This is the low. See? And doesn't that look like this blue pattern looks like that blue pattern? So price action is fractal. Pretty cool stuff. I think I did all right today, you know. This it bothers me, but this is the easy things to fix. Like, just don't revenge trade. I made a mistake and I should have just got out. I realized it a little bit late. I still can't believe I bought the market instead of selling. And I waited for the candle to close. I was like, "Oh, yeah, perfect." Hey, it is what it is, you know. That's why we learn. That's why we're practicing, studying. Hope you guys are doing good. Well, let me know what you guys think of the new thumbnails. I'm super tired of those words and stuff. It's just getting to the point where I'm putting words on those thumbnails and I don't like that. So I'm just gonna start screenshotting this chart and doing a little bit more markups with you guys. For something like this, maybe I'm gonna start adding gaps too. I just don't want to get it too cluttered. And when I trade, I have gaps. I've been putting in gaps, and I've started to actually draw these lines. Today I didn't because I was at work, but yeah, this is something that I am kind of starting to look at. Just working on it. You guys have a good one. We're below the EMA. Have a good weekend. Hope you had a good weekend. Hope you guys had a safe weekend. I'll talk to you guys later. Bye.